Welcome, D-traders. You are watching a recap of the Asian session. Investors prefer sitting on the sidelines today before the central bank's meetings. Japan's shares incurred losses due to a fall in the tech sector. Australian stocks, on the contrary, rose amid a surge in oil prices to a three-month high. Sentiment in Asian markets slightly improved amid optimistic statements from China's government. Oil prices went up as China pledged to increase domestic demand and stabilize the exchange rate of the yuan. The government is committed to stimulating domestic demand and helping the ailing property sector. If the authorities adopt extra stimulus measures, they will boost output and demand for oil. Given that China is the largest importer of oil in the world, it will increase its oil reserves in a case of a rapid economic recovery. As for the national currency in Asian trading, China's large state-owned banks sold US dollars to buy yuan. As a result, it jumped to two-week highs. The issue of a stable yuan was discussed at the government level for the first time in the last few years. After the massive cash injection by Chinese banks, the greenback declined slightly. On early Tuesday, it was trading near 101.20. However, it snapped its 5-day winning streak, not only because of China's banks' auctions. A fall in the US dollar could have also occurred because of a profit taken, yet its downward movement is likely to remain limited. Moreover, investors are cautious now in anticipation of the rate decisions by the Fed, ECB and the Bank of Japan. Yesterday, the US unveiled fresh reports which turned out to be rather mixed. The Services PMI Index contracted, while the Manufacturing PMI Index rose. Moreover, its increase to 49% exceeded the previous figure, as well as the forecast reading of 46.4%. However, the private sector growth slowed to a 5-month low in July amid weakening services activity. This led to new speculations about the Fed's rate decision, which was negative for the US dollar. As a result, it dipped across the board. At the end of the Asian session, the greenback was moving in a bearish channel of 101.10 and 101.40. As many expect the Bank of Japan to maintain its ultra-loose monetary policy this week, the rate gap with the other regulators could widen. It will inevitably lead to the depreciation of the yen again. Against the backdrop of a weak dollar, the Japanese currency was moving in the price corridor of 141.20 and 141.60. In the Asian trade, the greenback faced strong bearish pressure due to increased risk appetite. Therefore, the pair continued to retreat from its two-week high to 141.30. Nevertheless, a further decline is limited by the 2-month horizontal support level of 141, a high of 141.90, and the technical line near 142.05 may challenge the recovery of the dollar-yen pair. A moderate decline in the US dollar, China's commitment to supporting its weakening economy, as well as a jump in oil prices, helped commodity currencies grow. The Australian dollar climbed to 0.6775. On early Tuesday, it continued to maintain a strong bullish bias, moving in the range of 0.6725 to 0.6781. While traders are unwilling to open new positions, the Aussie will remain in demand. However, its trajectory will mainly depend on the US dollar's trajectory after the Fed's rate decision. Apart from that, investors are also looking forward to Jerome Powell's speech. These factors will definitely impact the short-term dynamics of the AUD-USD pair, and the New Zealand dollar has been trading in the green zone for the second session in a row, and today it's likely to grow in the range of 0.6190 and 0.6223. However, recession risks in the country may limit its upside potential. In addition, investors are awaiting the Fed's decision. Therefore, the Kiwi dollar pair traded rather volatile near 0.6200 because of the US dollar's weakness. Sentiment in Asian markets was mostly positive. Today, the economic calendar is rich in events. The United States and the European Union will unveil loads of crucial reports. And that's all for now. Hit the subscribe button and keep close tabs on the market developments with us. See you soon!